Welcome to the GetRealWealth.com radio show, where wealth means a lot more than just building a second stream of income. Listen and learn how 70% of the millionaires in America used real estate to create a lifestyle that most people only dream about. A lifestyle that includes good health, family, romance, travel, charity, and all the other parts of a balanced life. Now, here is your host, real estate investor and mentor, Steve Davis.
Good afternoon and welcome to the show. My name is Steve Davis and I'll be hosting. And as always, we're talking about using real estate to build a second stream of income. And today we're going to focus on question and answer on apartment complexes, primarily passive investing. Now, I do have training programs for the syndicators as well, but I want to focus on the passive side of it because this is where the vast majority of people sit. They don't want to run an apartment complex, but they want the high rates of return that apartment complexes produce. And that really is me too. I don't like running them, but I sure love investing in them. So we're going to talk about that. I want to take a couple of email questions first that are off of that subject. And one comes from a gentleman that is listening to the podcast and catching up. And he heard me talk about when you're wholesaling, there's no need to get a license. And in fact, it's a little more difficult to negotiate when you have a realtor's license. And he's asking why that is. And the reason it is because the disclosure laws for a realtor are very, very tough. Meaning, when I go negotiate a deal, let's say it's a $200,000 house that I'm picking up for $115 because it's got $40,000 worth of damage. I can just walk in and say, yeah, your house needs a lot of work. I'd be willing to give you $115,000 for it. That's as much as I can give you. Would that be acceptable to you? Then we negotiate a little bit and come up with a final price. Here's what a realtor has to say. Hi, my name is Mike. I am a licensed realtor. Your house is worth $200,000. I'm going to offer you $115,000 so that I can make a profit selling your house. I'm probably going to fix it up and resell it for $200,000. There's even more to it than that. But do you see the difference in the negotiation? I don't walk in and tell them what their house is worth. I don't have to tell them what I'm going to do with the property. And I don't know if I should even give my opinion. I think it's almost ridiculous that realtors have to do that. But the point is that realtors are professionals and they could easily take advantage of someone. So that's why they force them to do it. It just makes it much, much, much more difficult to negotiate your deals when you have a realtor's license. Because again, you have to go in there, you have to tell them what you're doing, full disclosure, and how much their house is worth. And you can't fudge it, because if they find out, then that's misrepresentation, and you're going to get in trouble for that. Now, am I saying that as a realtor you can't wholesale? I've never met a realtor that was a wholesaler. A realtor should get the listing and sell it and make their commission. I'm not saying that it can't happen, and it probably does. I just don't know how that would work. So you're in college. You don't need to take more courses. You're in college to get a job. Why would you want to come out and go straight into more education to get a job? You don't need to go to college if you want to be a realtor. So there's a lot of mistakes, I guess is a word I'm using, a word I'm looking for. But I would not bother getting my license. It's just not necessary. Very few investors have a license. You don't need a license to do what we're doing. Okay, next question that's by email. Give me just a second to scroll up to it. Oh no, this was just somebody asking for a meeting. Yes, Missy, you're a member of Real Wealth Academy. I'll call you after the show and we'll discuss that. Okay, the phone lines are open. It's 281-558-5738. And what I'm really looking for are multifamily apartment complex questions. If you've got questions about investing passively, give me a call. 281-558-KSEV. 281-558-5738. Or email me at asksteve@getrealwealth.com. asksteve@getrealwealth.com. So what people do, what Real Wealth Academy members do, and other groups do this as well, they pool their resources is what they're doing. They form little syndications, I think is the correct way to say it, where let's say somebody is going to be a syndicator and they take my courses or somebody else's courses on syndicating, and they learn the business model, but they don't have $2 million. They may have 100, 200, something like that, but they don't have $2 million to purchase that 200 unit apartment complex. So what they do is they go out as the leader of the deal, the syndicator. They go out and find the deal. They negotiate the deal. They evaluate the deal. They do all the due diligence. They line up the financing. They line up the insurance. They line up the rehabbers and contractors. They do all the work. Then other members of Real Wealth Academy are going to put up the rest of the money. So it might be 10 people with 200,000. It might be 20 people with 100,000 come up with $2 million. Then they go form an LLC and they buy the property. Now, where do they get that $100,000 or $200,000? It can be from personal funds. It can be from a self-directed IRA. The best way, if you've got a 401k, is to roll it into a 401k self-employed trust. And then you could also put it on credit cards. Not recommending that, but yes, we have had, I've heard of people buying entire apartment complexes on credit cards. You could get it from friends or relatives. Again, not highly recommended. Or, and you're going to love this, what's the most common? Debt equity in people's homes. So many people, their entire wealth is sitting in their home. They don't have any savings. They don't have a 401k IRA, but they've got $300,000 sitting in their home dead. And what they do is they refinance their home, pull out $100,000 or $200,000, and use that to invest in apartments. And we'll talk more about that after the break here on the GetRealWealth.com radio show. I'm your host, Steve Davis. You can email me your questions at asksteve@getrealwealth.com, asksteve@getrealwealth.com, or call me at 281-558-KSEV. You're listening to AM 700, the voice of Texas. Thanks for listening. Do you dream of a better life for you and your family? Do you want more time with your family? Would you like to travel more? Would you like to be less dependent on a job for your income? The solution is simple. Build a second stream of income. We can show you how. We are offering a free 2-hour introductory workshop on how to use real estate to build a second stream of income for you and your family. To reserve a seat, visit GetRealWealth.com and click on the free workshop button at the top of the page. That's GetRealWealth.com. Thank you. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. Phone lines are open for your questions about really anything. Don't worry about, it doesn't have to be about apartments, but that is the subject of today's show. So if you've got that, I would appreciate it if you give me a call. Remember, if you feel like you have a silly question, use a fake name, but get your question answered at 281-558-5738, 281-558-5738. KSEV, or email me. It's asksteve@getrealwealth.com. Asksteve@getrealwealth.com. So why are people doing this? Well, the reason that people are doing it is that they're fed up with stocks, mutual funds, and things like that get slaughtered every time something like COVID comes around. In 2001 it was the attack. In 2008 it was the recession. Then there were 2 or 3 other events that caused hiccups, major hiccups, in the stock market and mutual funds. They're also fed up with the fact that for the last 70 years the stock market has only returned about a 7% rate of return. That's the average over the last 70 years. So that's like our base cash on cash rate of return. And that doesn't include our refinances. It doesn't include the appreciation. It doesn't include the principal pay down and all the other ways that the deal makes you money. But in these apartment complexes, people are getting, even in the up market, 50 to 100% rate of return at the end of the second year. In a down market, it can be 100 to 200% rate of return at the end of the second year when you refinance the property. Do you see why people want to do this? It's life-changing. One of Robert Martinez, he's been on the show a couple times. He's one of the syndicators at Real Wealth Academy. One of his students took $100,000 and over 5 or maybe 10 years, let's say 10 because it's still insane, he took $100,000 and turned it into $1 million cash. That's crazy. That same money in the stock market would be worth what, about 107? That same $100,000 in the stock market would be worth something like 170 or 200 compared to $1 million. So that's why people are doing it. If that sounds like something that's attractive to you, then that's why you should give me a call. 281-558-5738, 281-558-KSEV, or email me at asksteve@getrealwealth.com, asksteve@getrealwealth.com. So let's start now answering some emails that I have gotten in the past. I have not answered these on the radio yet, but they are older. But they're important for everybody to hear. I answered these off the air directly through email. And these are, I'm going to try to be consistent and stick on the apartment questions. This one is talking about the fact that, Ivanovsky collected only 80% of his rent this month. How many units is this? 574? Yeah, 574 units. But by the 15th, he had collected 87%. So his normal collections are up at 93. So he's still missing almost 10%. This is an illustration that a well-run property, and I got to give this Ivanovsky credit, a well-run property is going to do well even during an event like COVID. When you see people down at 50%, and the national average, by the way, was 70%, he was at 80%, and he eventually got it up to 87%, and he's still collecting. He's still working with his tenants. He's obviously a good landlord. But the people who were down at 50% are in that equation. In other words, when they show you the national average was 30% of renters didn't pay their rent, they're including the slumlords in that number. They're including the mismanaged properties in that number. If they were to go out and do a survey of just well-managed properties, it would have been up at 80+%, like everybody that I've been talking to. So, Ivanovsky, your question, is this normal, is you're probably better than normal. I think you're doing a great job, is what I told him. And that, I thought there was one other question in here. Oh yeah, do you think that the slumlords are going to run? Yeah, absolutely. Let me answer that question this way. His question is, do you think the slumlords are going to lose their properties? I do. I think this is going to clean a lot of bad people out of the apartment industry. And these bad people that don't care about their tenants, that don't care about the community, that steal from their properties every month, are going to get in trouble. They're going to get behind 3 and 4 months on their mortgages. And yeah, the mortgage companies are going to be somewhat lenient, but they're going to start foreclosing eventually. And these slumlords are going to want to sell these distressed assets. So yes, Ivanovsky, I would start raising capital, and I would be getting myself prepared to buy some really good deals in the coming year or two because of the COVID response. Okay, phone lines are open, 281-558-5738, 281-558-KSEV, or you can email me at asksteve@getrealwealth.com, asksteve@getrealwealth.com. Okay, this one is a new one. This one is not old. This is somebody who paid cash for an apartment complex. Let me see if I can find the units. 200 some units. So what should he do? Well, the first thing you've got to understand, Christian, is you never pay cash for real estate. That is considered almost dead equity. You know how I complain about the stock market only producing about a 7% rate of return and how ridiculous that is? Well, guess what? When you pay a piece of real estate off and you don't use leverage, a mortgage, you know what your rate of return is going to be? 7 or 8% max. Whereas with a whereas with a mortgage, your cash on cash rate of return can double, and I know we're talking apartments, but in single family it can even triple. So the first thing that I would do is get that equity out of that property and go buy a second apartment and a third apartment complex, or you might buy one 400 unit. But if you go out and take a 70% cash out refinance, take that 70% and go buy another 400 units, Christian, what would that mean to you and your family? It'd be a major change, wouldn't it? It'd probably, if I'm guessing, it would triple your income. That is definitely what you want to do. And again, be very cautious. Do not pay cash for real estate. And remember that the goal is not to pay your real estate off. It's to keep refinancing and pulling cash out. And when you do that, it's tax free because it's a loan. It's an incredible tool. I was talking with a syndicator the other day. He had and it was a bad deal at first. When they first bought it, everything went wrong. And for like the first year and a half, they thought they were going to lose the deal. They thought it was going to be a foreclosure. They just couldn't get it going. And I'm not sure exactly what changed, but by the end of the second year, they were starting to do better. By the end of the third year, they refinanced, pulled all their original money out, and still own the property. Do you know that they've refinanced that thing 2 times since then? For a total of 3 refinances? They've pulled out over 250% over a 10-year period. It's crazy. But this is happening all the time. This is the difference between owning a business and just owning a REIT or a stock or something like that. When you own a business like an apartment complex, your rates of return are astronomical when compared to what you get in the stock market. Okay, phone lines are open, 281-558-5738, That's 281-558-KSEV, or email me at asksteve@getrealwealth.com. asksteve@getrealwealth.com. Okay, this question I've got to answer negatively, Duncan. He's asking if you can wholesale apartment complexes. The answer is yes. I've done it. Was it really fun? Was it easy? Was it something I recommend? No. These apartment buyers are extremely sophisticated. Think about it. If somebody's walking up to you with $2 million to buy a $5 or $6 million property, don't you think they're pretty savvy? Yes, they are. And they don't want to see somebody just go find a deal and flip it to them for $100,000 more than they found it for, when they're the ones taking all the risk. They're the ones that have to do the due diligence, which can be in the hundreds of thousands of dollars. It's just a very, very difficult thing to do. Now, with those discouraging words out there, can you do it? You can, but you better line up buyers first, and they better know exactly what you're doing before you bring them a deal. Okay, phone lines are open, 281-558-KSEV, 281-558-KSEV. You're listening to AM 700, the voice of Texas. This is the GetRealWealth.com radio show. Thanks for listening. Real estate accounts for more millionaires in America than any other investment vehicle. This second stream of income can truly change your life. More time for travel and romance, more time for family and fitness, more time for whatever you want to do with your life. To find out how to build this second stream of income, attend our free 2-hour introductory workshop on real estate investing. To reserve a seat, visit GetRealWealth.com and click on the free workshop button at the top of the page. That's GetRealWealth.com. Thank you. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. Phone lines are open at 281-558-5738. That's 281-558-KSEV, or email me at asksteve@getrealwealth.com. asksteve@getrealwealth.com. This is a email question that is about single family, but the answer applies to apartments as well. This gentleman, Connor, got a quote for $8,000. $8,000 to level a single-family home. This is outrageous. You see, what people do is and Connor, I'm not picking on you. I'm talking about everybody that this applies to, I should say. They're cheap. And they literally let the foundation company, who gets paid by the pier, tell them how many piers they need to level the house. Are you kidding me? Don't do that. Get an engineer in there for $450, and the engineer will tell you how many piers you need. 8,000, let's say it's 150 a pier, or let's go 175. So 8,000 divided by 175, 46 piers. I have leveled 5 houses, 1,500 square feet to 2,000 square feet. I have never, ever been over 20 piers. This is like this company is trying to level the entire house when only one corner needs to be repaired. See, you can't let the foundation company tell you how many piers you need. You need a third party. So let's say it comes out to 18 piers. 18 times 175. That's $3,100, and $3,150 plus the $450 for the engineer. That's $3,600. Less than half, by not taking a shortcut, not being greedy, and doing the right thing. So Connor, that $8,000 is outrageous. Let it go. get an engineer, have them tell you how many piers you need. They'll do a better job anyway, and only do that many piers, and it's going to save you about $4,400. All right, Connor, hope that helps. Oh, was there any more to your question? I'm going to rent this house out. Oh, I know. Yes, do it now. Do it now. In fact, the mortgage company, you probably need to use a hard money loan on this, because Fannie Mae is not going to loan on this house with that cracked slab. They're just not. So what you're going to need to do is go with a hard money loan that includes the money for the slab repair. So that's one loan that includes purchase price and the repairs, and sometimes you can even roll your closing costs into the deal. So use a hard money loan, buy the property, rehab the foundation, then immediately lease it and refinance it into a Fannie Mae loan. And the Fannie Mae loans are, I think, about 3.5% right now. Crazy low interest right now. This is an incredible time to be investing in real estate. They're giving away money. 3.5%, that's free money, people. 4 or 5% is free money. So take advantage of it. This is the time to be buying real estate, and it's going to get even better over the next 6 to 12 months. Okay. Email's open. Ask Steve at GetRealWealth.com. Ask Steve at GetRealWealth.com, or call me at 281-558-5738, 281-558-KSEV. Now, this is a long-distance listener from Philadelphia, and they're looking at a 250 unit. It appears to me, David, that you don't have enough information to evaluate this deal at all. There is a lot to it. You say, well, he wants me to evaluate it and put up this hard earnest money. By the way, if you don't understand the term hard earnest money, it means you don't get it back. This is $100,000 to take a look at the deal. If you don't want the deal, you lose the $100,000. That's risk. That's a high risk. So this guy's not giving you enough information to make that $100,000 decision, David. Man, this is complex. It's very hard for me to answer this one on the air, because analyzing a multifamily apartment complex is complex and too complex to explain on the radio. So, David, I highly recommend that you move away from this guy. He appears to, in my opinion, he appears to be lying. In other words, if you put up that $100,000, he's going to show you numbers that aren't true. And then you're going to do your due diligence, figure out those numbers are not true, and lose your $100,000 when you back out of the deal. So I would stay away from this guy and go look for something else, David. It really looks like a scam to me. Okay, phone lines are open, 281-558-5738, 281-558-KSEV, or email me at asksteve@getrealwealth.com. Good friend of the show is on the phone lines now, Rolf. Rolf, thanks a lot for calling in. How are you today?
Doing great. How are you doing?
Excellent. Good to hear your voice.
My question is, how much do you need to start passive investing?
Really, 60 and up. 60 and up is a good number for passive investing.
Okay, great. Thank you so much.
All right, thank you, Rolf. Yeah, if you got more than that, of course, that's even better. But, yeah, 60 and up. Okay, let's go to the next email. Low credit score applicants on my apartment complex. Well, that's pretty standard in apartment complexes. You have I know some of you are going to want to choke me when I say this. There's a lower standard to get into an apartment complex depending on the grade of complex. The A, the B, the C, and then the D if you invest in D-class properties. So I don't eliminate people just because they have a low credit score. I've had great tenants with low credit scores. But the reason they were great tenants is because psychologically there was something about them that made them pay their rent before they paid anything else. Then there's some people who psychologically, they pay their car note before they pay anything else. And I wouldn't get my rent. They'd be driving around a Lexus. I'm like, you know you got to go, right? I'm going to have to evict you. Beautiful car. Love having it in the parking lot. But you got to go because you don't pay your rent. So it's just because somebody has a low credit score does not instantly eliminate them. I am going to still call the present landlord and a previous landlord. Remember those two, that point. Do not ever only call the present landlord. Why? Because that present landlord may want to get rid of them and might tell you some things that are exaggerated or not quite true just to get rid of them. But I tell you what, the previous landlord has no reason to lie, and he'll tell you, oh no, those people were scumbags. They destroyed the kitchen and left with owing me 2 months rent and broke the lease and boom. Now that's a person you don't lease to. But if you call two previous landlords and they go, no, they always paid on time, both of them say the same thing, then I'm going to continue looking, meaning I'm going to go verify their income, I'm going to go verify their employment and so on, and I'm still going to let them in. Occasionally, if it's really bad, I'm going to require a double security deposit. But on apartments, you know, that can security deposit can be relatively low, $250, $300, $400. So you double that, you get $800. So it's not a deal killer. So low credit score applicants, you can lease to them safely, but you've got to do your due diligence just like you would anybody. Talk to at least two landlords, the current landlord and the previous. Then verify that income, verify that job, run the credit and criminal report. That's the one I was forgetting. Credit and criminal report. You obviously already did the credit report. And you can still lease to them, but don't be afraid to ask for that double security deposit. All right, phone lines are open, 281-558-5738, 281-558-KSEV, or email me. It's asksteve@getrealwealth.com. asksteve@getrealwealth.com. Okay, somebody just emailed me that they've got $25,000. Can they invest passively in a deal? You know, I'm sure there's some syndicator out there that would take you at $25,000, but they're probably untrained. They're not a member of an organization. It's going to be much higher risk. If you've got $25,000, I suggest that you focus on single family, or you focus on flipping till you get up above $60,000 to be able to join a group and invest with competent, well-trained syndicators. Again, with $25,000, yeah, I would focus on single family, or keep the $25,000, flip a few deals till you get up above $60,000, then join a group. Well, you need to join a group to learn how to flip probably, but yeah, 25 is just too little. Not that you can't find syndicators that'll take it, but they're probably not a member of a group. They're probably not competent, and you run a higher risk doing it that way. Okay, phone lines are open, 281-558-KSEV, 281-558-KSEV, or email me at asksteve@getrealwealth.com. asksteve@getrealwealth.com. Okay, that email is too long. I'll read it during the break, which we're headed to right now, and I'll get to it as soon as we come back from the break here on the GetRealWealth.com radio show. I'm your host, Steve Davis. Call me at 281-558-KSEV. You're listening to AM 700, the voice of Texas. Thanks for listening. Are you tired of losing money in every down market? Did you know that real estate makes money in both the up and down markets? In fact, we make more money in the down market. Hi, this is Steve Davis, host of the GetRealWealth.com radio show. Yes, we are praying for a down market, and you should know why. To find out why, attend our free 2-hour introductory workshop. To reserve a seat, visit GetRealWealth.com and click on the free workshop button at the top of the page. That's GetRealWealth.com. Thank you. Welcome back to the GetRealWealth.com radio show. I'm your host, Steve Davis. We are in the final segment of today's show, so if you've got a question for me, you really need to call now. It's 281-558-5738. Let's go to the phone lines where Mark has waited patiently through the break with a question about the single-family market. Mark, thanks for calling in. How can I help?
Steve, how are you?
Excellent, thank you. How about you?
Oh, making it. Do you foresee, with people losing their jobs and filing for unemployment during this coronavirus, do you foresee something similar to what we had in 2008 when the stock market crashed and all the foreclosures hit the market? Do you see something anywhere close to that?
I think it's going to be very similar, Mark. I think the opportunity is going to be incredible. I don't think it will be as big a dip as there was in 2008. I don't think it will last as long as the 2008 crash did. But yeah, there's going to be some incredible opportunities as people get out of their homes and try to avoid foreclosure and start selling their homes at deep discounts.
Now, typically they do a pre-foreclosure before they do a foreclosure, but
correct.
Are you considering it would probably be a good time for investors to try to maybe buy some of these foreclosures?
Yes, absolutely. I'm promoting that heavily. I think that people are going to make a lot of people are going to make a fortune over the next 12 to 24 months.
Well, I'm a real estate appraiser, so I'm pretty familiar with the market. In fact, today was the first day I've actually appraised a house in a month. Basically due to the coronavirus.
Sure.
I'm 3 years in cancer remission, so my immune system's a little bit lower than most people, so I'm at higher risk.
You need to be safe, Mark.
But it seems to me the supply is up right now, demand's low, which means they'll probably lower the prices, whether it's a new house or a resale. And once the market picks up again, the prices will go up again.
Yes, I totally agree with you, Mark. I think you're dead on.
Okay, bud. Thank you for talking.
My pleasure. You take care. Yeah, there's going to be a tremendous opportunity for people. There's going to be people that, unfortunately, because of this COVID response, which my opinion is it was an overreaction, a massive overreaction, that is going to cost thousands of businesses, probably hundreds of thousands of businesses that won't be able to reopen. There's going to be millions of people lose their home. I don't care, with a moratorium on payments or whatever. How do you catch up when you're 3 months behind? And you only have one source of income, a job. Crazy. It's going to be terrible. But those people will be looking for people to buy their houses and get them out of the foreclosure. And that's where investors come in, credible investors who actually care. Find people who are trying to save themselves from foreclosure and help them. It's that simple. You win, they don't get foreclosed on. Give them money to move. Give them money maybe for a down payment a deposit for a apartment or another house, and help them get out of that foreclosure. Okay, phone lines are open, 281-558-5738, 281-558-KSEV. Yeah, this is what I don't think is going to happen. But again, I'm speculating, which I hate to do. I think it's ridiculous because it's crystal balling it. But based on my past experience from 2008 through 11, there were so many deals that were zero down. It was ridiculous. That's with hard money loans, zero down with hard money loans. I think there's probably going to be a lot of those out there as well, just not as many. So there's my little theory. They're going to be out there, but not as many as there were in 2008. I don't think it's going to be as bad as 2008, 9, 10, 11, but I could be wrong. People could spaz out, just start liquidating their homes. It seemed like in 2008, 9, and 10, it was a weird thing. People just started deciding they didn't want homes anymore. Weird to me. And it was as if the prices weren't ever going to come back up. It's like, you're living in the house, you're paying the mortgage, don't worry about the fact that it lost value. But they were freaking out and going, oh, it lost value, you got to sell. And of course they're selling when it's down. Humans are odd, no doubt of that. Okay, my email's open at asksteve@getrealwealth.com, asksteve@getrealwealth.com, or call me at 281-558-5738. This next question is from a Shane. When can I start removing tenant stuff after they abandon the house? Yeah, house, okay. This is again a single family question. You're going to have to look at your lease. Your lease should indicate that. The other thing that I always do before I remove stuff from an abandoned house is I call the judge that would have handled the eviction had I had to evict them and ask them their policy on that. So you do it exactly the way the judge wants you to do it. And I find those people are very helpful. I've got some negative things to say about certain government-run systems, but the legal system that I've been exposed to, which is mostly real estate, they seem very helpful at these judges' offices. And I guess it's why they probably get so many calls. They've got a little answer packet right next to the phone. So, yeah, do those two things. Read your lease, see what it says, and then call the judge for that area and find out if they've got any special policy on that. They probably don't. They're probably just going to go with your lease, but it's definitely important to ask in case they've got some little idiosyncrasy. And yes, they're not supposed to, but they do it, so it's best to check. Okay, phone lines are open, 281-558-KSEV, 281-558-5738. Here's another question on refinancing, and this is one, Matt, you don't want to pay off your real estate. So this idea of refinancing so you have fewer payments, in other words, putting it on a 10-year mortgage instead of a 20, here's what I would do. I'd refinance it and put it on a 30-year mortgage. You can always pay it off early if you want, but when times get tough, like COVID, you have a much, much lower mortgage payment. But the other thing is, you don't want to pay off your real estate. It becomes dead equity. It's only making you 6-7% cash on cash. Whereas a financed, if you've got leverage on the property, you're probably going to make 15-20% cash on cash. Way higher, double, even triple. So be very careful of that middle class and poor belief that you pay off your real estate. That is not how people get wealthy. People get wealthy through a thing called leverage. And if you unleverage your properties, you're going to make a lower rate of return than if you have them leveraged with a mortgage. Hope that helps. Okay, 281-558-5738 is the call-in number, 281-558-5738, or email me at asksteve@getrealwealth.com. Let's see, here's another one. Man, okay, here, I finally got it. We're going to leave this. No, this is from Tom. I'm going to refinance 2 homes. I'm in the middle, and they informed me that they had to take the homes out of my LLC to refi. Is that standard? Yes. Are there companies that will do it through an LLC? No. That would be a commercial loan, and it would have a much higher interest rate, much higher closing costs. You don't need your properties in an LLC. This is something that attorneys do to scare people. They tell horror stories And they say, ooh, and if you had an LLC, you would have been protected, so give me $2,000 and I'll set it up for you. LLCs are basically useless with single-family homes. There's 3 levels of protection for your liability: LLC, insurance, and management style. And Tom, guess which one of those is the strongest defense against liability? Management style. Take care of the doggone property so there's no reason for somebody to sue you. And then if you do something stupid and get sued, you've got $300,000 liability insurance on every house, and you have a $1 million umbrella policy over all your houses. They're never going to, they don't want the house, and they don't want to sue you. What do they want? They want to sue the insurance. So, yeah, don't worry about letting that LLC go. Again, it was probably an attorney that convinced you that you needed it, and you really don't. Not on single family. Now, Tom, when you move to apartment complexes, boom, every one of them will be required to have an LLC by the bank. Okay. All right, that's really the end of the show. This next email is way too long, so I will answer this after the show, so don't worry about that, Justin. We'll get this answered. This has been the GetRealWealth.com radio show. I'm your host, Steve Davis. Thank you so much for listening, and have a great and safe weekend. Take care.
This has been the GetRealWealth.com radio show. Please remember that this show is for entertainment purposes only and should not be construed as legal, tax, or investing advice. Always get a professional opinion before making any investment decision. To find out about the mentoring and consulting at Real Wealth Academy, visit GetRealWealth.com and attend one of our free introductory workshops on real estate investing. That's GetRealWealth.com. Thanks for listening, and have a great rest of your day.